Hi folks, David Waring here again with InformedTrades.com and today's lesson of the day. In our last lesson we finished up our series on technical indicators with a look at the Parabolic SAR. In today's lesson we're going to start a new series on candlestick chart formations with a look at what these tell us about the supply and demand situation in the market. So let's get started.
Okay, so I'm not going to go into great detail on candlestick charts. I've done that in my lesson on the basics of charting. If you haven't been through that, might be a good time to pause this video and shoot over to the InformedTrades.com blog and go over the basics of charting lesson there. But just as a quick refresher, what a candlestick chart does is it uniquely represents the high, low, open, and close by connecting the high and the low with a thin line, and then the open and the close are represented by the body of the candle, which is the thick part in the middle, which is shaded a different color depending on where the close is in relation to the open. So on most charting packages, if the close is higher than the open, then the body of the candle is shaded white, and if the close is lower than the open, then the body of the candle is shaded black. Now that may be red or green. The color doesn't really matter as long as you understand which color represents a higher close than open and which color represents a lower close than open. At their most basic, what candlestick charts are great at doing is giving you a picture of what the supply and demand situation was for one individual period, of trading. So if you're looking at a daily chart, that the candle for the day gives you a good indication of whether buyers or sellers won the day, so to speak, and how much control they had throughout the trading period. Long candles are representative, long white candles that is, are representative of a period where buyers started in control of the trading period and then remained in control as they drove prices up throughout the trading day. Black candles, on the other hand, represent a period of trading where sellers started in control of the trading and then dominated as they drove prices down throughout the trading period or the trading day if you're looking at a daily chart. Long wicks are representative of a trading period where there was a lot of action, but at the end of the day, the close was fairly close to the open for the trading period. And what long wicks tell you about trading action is basically if you've got a body of a candle which is towards the top and a long wick which is on the bottom of the candlestick, then this is indicative of a market where the sellers initially were in control and pushed down to make that low there, but then the buyers regained control and pushed prices back up to close the day or the time period, whatever time period you're looking at, close to the open for that time period. Similarly, if the body of the candle is at the bottom and you've got a long wick at the top, then this is indicative of a time period where the buyers were initially in control, and then the sellers took back control and drove prices down to take back some of those gains and close the trading period closer to the open than would have otherwise happened. Short candlesticks represent either no action, where there's not much trading going on at all, or can also represent an intense battle that neither buyers nor sellers have won. And that's going to be kind of significant as to, if there's no action in the market, then a short candlestick doesn't really tell you anything. But if short candlesticks show up at places such as the top of a long uptrend or something like that, then that can be very indicative of a change in the tide, so to speak. And that's what we're going to look at in our next lessons, is how you can, depending on where some of these patterns or where some of these candlesticks show up and how they show up on the chart, what that tells us about the supply and demand situation, or that battle between buyers and sellers, and a lot of times what it tells us about the shifting tide that we may be able to place a trade with. Okay, so the purpose of the InformedTrades.com community is to build a group of or community of traders that are looking to learn without all the hype of that's associated, traditionally with trading education. So I encourage you, if you haven't done so already, to not only visit the InformedTrades.com site, but every page on the site has a comment section. So I encourage you to share your knowledge so we can all learn from it, and to ask questions in areas where you may have those. Okay, so that's our lesson for today. As always, if you have any questions or comments, please feel free to leave them in the comments section below, or visit InformedTrades.com, and have a great day.